Okay, it's about 22 minutes before 9 now. Many of us have been asking what the increase in last week's interest rate means to us. And most likely we will be paying a little bit more, higher terms on our long-term purchases, such as homes and car loans. But also Moody's remains the only one of the three major credit rating agencies that still assesses South Africa's debt at investment grade. And this after S&P kept the country's credit rating at below investment level. And so we're going to discuss this further with Dr. Azar Jammine, Chief Economist at Econometrix. Good to see you again.
Good to see you. Thanks, Kamina.
So let's just start here. First and foremost, this change in 25 basis points from 6.5 to 6.75% to lay people, how is it likely to affect them?
I've seen the analysis that suggests that a person with a 1 million rand home loan, for example, will now end up paying close to 500 rand a month more on his interest payments. So that is quite material. But before people panic, they must recognize, and this is why in some respects it came as a surprise that they did increase interest rates, that oil prices have fallen to such an extent in the last few weeks that we could be heading for a cut in the petrol price of up to R1.80 a litre in next week. And that's going to go a long way towards at least temporarily compensating for the impact of the higher interest burden, especially for those who have car loans or home loans or that kind of thing. Obviously, for pensioners, it's a positive move because they will now earn a little more on their pensions. They'll be able to live that much longer earning money from their pensions. But the ratio of those who benefit as opposed to those who will suffer as a result of the rise in interest rates is more or less in the region of one will benefit for every two that actually feels the pinch. So
inevitably it comes down to the so-called middle class, those who generally would be purchasing assets on a credit. So your bond will increase, your car payment will increase, and there will be a knock-on effect on all clothing and whatever other accounts you may have. And with regard to that, you touched on it slightly. Could we have waited? Could we have waited to actually hike?
I personally believe that we could have waited, but the Reserve Bank was on a mission. There was no question about that, because in fact the inflation outlook is now better than it's been at any stage in the last 6 months, the shorter term inflation outlook. But they felt that they needed to go for it right now, because what has frustrated them is the fact that inflation seems to have got stuck at around 5%, and they're desperate to try and get it down to levels of 3% in the longer term, or at least 4.5%, which is the middle range between 3 and 6%. But you know, it's going to be a tough call, and they're hoping that by doing this, they will eventually change inflation expectations to believe that inflation will be a little lower in the future at around 4% than is the case right now.
And again, just in educating us lay people, what would that benefit be? How would that accrue to the layperson?
Well, the benefit of a lower inflation rate is that you don't need to press for dramatic wage increases to keep pace with the cost of living. And especially, really, it's the poor who are penalized most by an increase in the cost of living, because unless social grants rise in line with inflation, people just get horribly left behind in terms of their ability to keep pace with the rate of price increases.
Now, one of the criticisms against the Reserve Bank has been that they seem to focus inordinately on inflation targeting, as opposed to finding other means of, making our lives easier as a nation when it comes to monetary policy and those sort of things. What's your take on that?
It's not the Reserve Bank's task to try and make life easier for the ordinary South African. There are many people whose task it is to try and do that. And we need to start from the fundamentals, basics of the structural weaknesses of the economy, which is what is making life so difficult for South Africans.
But don't they have a role to play in that?
The Reserve Bank has a role. At the end of the day, they see their role as being just controlling inflation and the rate of increase in the cost of living. They don't see their role as going way beyond that. They believe that if they keep inflation low, they are doing their bit to try and ease the situation.
But is that enough? Would you be upset, as Azar Jammine, who's an economist, would you be upset if the Reserve Bank actually went a little further and did a little more than just target inflation and making sure that is at an acceptable level?
You know, the danger is that when you start playing around with the cost of money, it can get out of hand completely. And what the Reserve Bank has been highly successful in doing is maintaining the credibility in the eyes of international investors in a manner that no other institution in South Africa has been able to do in recent times. There was a time 10 years ago when our national treasury was regarded extremely highly internationally, and they had managed to rein in our public debt and brought down the need for us as a government to keep borrowing, etc., and they were highly regarded. There was a time when South African Revenue Services was highly regarded as being one of the most outstandingly upright and organizations with high integrity that was and still succeeding in raising taxes at a very efficient rate. Nowadays, it's just the Reserve Bank that is left acting as a bastion against perceptions that this country is on a decline from an economic perspective.
Well, just a final question. We're going into the festive season, and the question about whether we're still in a recession or not, do you think people should be spending? Should they still be very cautious?
I think people should still be extremely cautious at the moment. You know, especially if there is any chance of them losing their job over the coming year or so, because unfortunately, job creation is going to be extremely elusive for a long while to come until we can really lift our economic growth rate upwards. And there's a lot of work to be done before we can do that. We are hoping, as economists right now, that if the current president, who seems to understand what is needed, gets through the elections fairly successfully, he'll be able to start being more proactive in doing the right things that can see our economic growth rate lifting upwards. But we're not going to see significantly better days before 2021 at the very earliest.
Well, on that depressing note, we'll have to leave it. Thank you to Dr. Azar Jammine, who is Chief Economist at Econometrix, explaining to us about this increase in the repo rate. And many of us, of course, complaining that we might not have enough money to service our debts. This is true, and as he says, at least for the foreseeable future, it's still bleak days ahead. Let's take a break.